Welcome back, guys. Crypto4Life channel. Today we'd like to talk about law of effort. And in this video, you will understand with a simple tool how to identify that trend. We already talked about a structure, so you can use this like a law, like an additional tool or additional model, like confirmation of the direction of the trend. So let's dive in. Guys, I highly recommend you first of all go and double check the video about a structure, just the basic knowledge about this market structure. So it will help you with just trading, with investment, and it help you on a distance, definitely. So law of effort, what does it mean? It means we have to use the date range. How many days we trade with the impulse and how many days we go into with a correction. So impulse usually, if we are in an uptrend, impulse usually took less days than correction. Sometimes it can be the equal. So why the impulse and an uptrend? If we talk about an uptrend now, why the impulse is less days? Because the market makers, the big players, accumulate faster. So they invest, then liquidate some short position and it push the price higher, right, to some top. After that, we go into correction. So slowly but surely, they fix some profit, they open short position, but at some point of interest, we're gonna stop, by seasonality, by news, or and continue rally higher. So this is example. We will still in the uptrend, right? So you can just in theory identify it. Take a look. This is an impulse, big impulse. So we usually move like impulse correction, impulse or impulse sideways impulse. And let's count from this low, December 1st, December 4. Here we count the days. It's a daily time frame. Absolutely the same story works on a 1 hour time frame, intraday and 15 minutes time frame. So we're gonna check it. Take a look. From this lowest point where we start impulse to the top, it took us 20 days, just 20 days. So we move like just an average, like 183%. We pump it just in 20 days with correction, of course, with some small pullbacks. After that, we go into correction. So let's use the FIB, for example, this one. And this is the top. We formed the correction exactly to 0.5 level by FIB, rejected 0 level, supported 0.5 level by FIB, and we go in like a small correction. So all these time periods, we can't break it down the new high. That's the point. So here, we just move in this range. We already talked about the range, about deviations. So I recommend it also go and check that video. So here was just an impulse and we formed the range. So basically this is a correction to this impulse. And we corrected to 0.5 to 0.5 and form deviation at the top, hit 27 block and going down. After that, we can count the downtrend, law of effort. So take a look how many days. We span it here from the top till we breaking out the new high. No, it's a percentage. So here, date range. Here, impulse, 20 days, 67 days to correction. So when we just break it down and sweep the liquidity pool of high. Then, of course, we go in one more correction. So technically, it even took more, like 78, 79 days. So this is a way. And technically, guys, we are should be in the uptrend, right? So globally, yes, it was the uptrend and it's showing us the continuation of the trend. After new all-time high, the injective pumped it like almost 20% more. 20% more. So it's good one. People always think like 20%, it's not a big deal, but guys, with the second leverage, even with the second leverage, it's a 40% profit. It's crazy profit. So how to work also with tokens and how to trade after all-time high, I highly recommend you go and check educational video also. After that, guys, take a look at that downtrend. So here from this impulse, this one, we drop it down here, find a support in 7 days. Correction took us some pullback, took us like, once again here, date range. Took us 7 days equal and we're going down again. So sometimes, I tell you, sometimes it's equal. And of course, you have to work in a complex, like this is an impulse. You have to find the logical reason why we stop it here. So it can be, let's say, where is that one? Of effort. So it was the fulfill of weekly gap. Let's go to 12 time frame. So this is an example. Last one. Take a look. Here's a top. We got like to the bottom, 2 days and 12 hour. We bounce it back 18 days and 12 hour. Find the rejection at fulfill of daily and 50%, not a fulfill of gap, right? And continue rally down. But we have to work in a complex, right? So this is just like additional tool which can help you identify it. So like you can see, this FIB are broke from this impulse. So that's the point, guys. You have to work in a complex. Only one single instrument is just this one, date range. So here, lowest point, for example, date range to the top here, 12 hour. From the top, we go into correction. We break it down the high. This one, it took 22 days, 22 hour 45. So 12 hour 30 minutes time frame, 22 45. So like almost 2 times bigger. Impulse, sideways, or deeper correction. Also, it's an example on 15-minute time frame, guys. Take a look. We stop it almost at 0.5 level by FIB. How to work with the FIB? Also recommend you go and check educational video because you have to work in a complex. Try use backtest reply bar on TradingView and double check even on the BTC on historical charts the law of effort. So this was impulse down, bounce, consolidation, and until we break it down the new low, it took us more time than it was this impulse. And if the impulse is less than correction, it means we got like power to drop the price faster. So it means that the direction are down or up. So guys, I hope you like this video. Subscribe, channel, hit the like button, hit the notification button. Don't forget to join my Telegram channel. See you next time, guys.